Welcome back to Global Business Europe. ASML has reported rising orders for its chip-making equipment. The Dutch giant, Europe's largest tech firm by capitalization, says orders totaled more than $6.2 billion in the 3 months to the end of September, beating analyst predictions. However, the company warned that it expects to see a significant fall in demand from China next year, although its chief finance officer claimed that wasn't due to stockpiling by Chinese buyers. Now, Rob Kniaz is founding partner of H-Tree Capital, a London-based tech venture capital firm, and he joins us now. Rob, what's your take on this data coming out from the Dutch firm?
I think it's no surprise. I mean, the demand is going to be outstanding for their product for quite a long time. They're an industry-leading producer, and they produce something that everyone must have. So I'm not shocked at all. The only source of any questions would be volatility, whether it would be a bad quarter because orders got delayed. But otherwise, I think the demand is going to be phenomenal.
It's interesting what's happening with their forecast for 2026. They've revised it upwards. They're more upbeat. But at the same time, they acknowledge they're going to be lower orders from China. How do you understand that then?
So I think there's two factors, and it's the China demand for domestic manufacturing and international AI demand, which is phenomenal and growing. So I think both those factors, if overlaid, lead to tremendous growth. There's a chance they kind of don't overlap and there's a gap in between, which is what they're prepared for. I think what they're saying is there probably is less of a macro risk in their view of the China market, and regardless, the AI demand is still through the roof. So I think no matter what, they'll probably have a better year than they originally said they would.
Let's focus on what's happening in China, pioneering more chip-making equipment. Are we likely to see a lot more of this in China and perhaps even other countries, this self-reliance trend?
Yeah, certainly. I think every country is trending right now towards more self-reliance, and as a general national security question. I think if you look at ASML, they said particularly China is probably 10 to 15 years behind the world market. So I think this will be a trend for a long time, but I don't see it happening anywhere in the short term, or if it does, it's at the very, very low end of chips.
Where are we with the AI boom? Are we still sort of heading for the stars, or is it going to level out anytime soon?
I think, like any trend, it spikes up, then goes down a little bit and overcorrects and kind of flattens out in the middle. I think we're probably still somewhere in that trend of spiking up. People are still using it every day and really happy with it. I think managers don't necessarily understand it as much, and they've ascribed kind of things they can do that aren't really possible yet, but people are still figuring out what is possible. And innovation is happening quite fast, where every few months a new version comes out from someone, and it does something better than it did before. So I'm still fairly interested to see how it develops, and I don't think the froth is going to go away anytime soon.
At the same time, we're seeing significant trade tension, most notably between the United States and China. We know that chips rely on these rare earth minerals. It's a market almost completely dominated by China. How could that impact the AI boom?
I think undoubtedly it can create a stoppage in the flow of chips. I mean, if one of the main components is gone or off the market or limited, you're in quite a problem. I mean, between Russia and China, that's a large part of the rare earths market entirely. I think the rest of the world is trying to find second sources. The Americans are doing it in places like Nevada, South America, places like Chile, Africa. And I think no matter what, like any commodity, when the price is high, it encourages discovery in many other places. Historically, because China had it locally, there's less of a need to do this, and now everyone's going back and de-risking the same way they're evaluating their supply chains for China exposure.
Lovely. Thank you so much. That's Rob Kniaz. He is the founding partner of H-Tree Capital. That's a London-based tech firm.